Hello again, everyone. John Flynn here from Flynn Real Estate, serving Southern Ontario, based out of Niagara Falls, here to give you my honest and professional opinion on the 2022 Canadian housing market. Thanks for everyone that subscribes, shares, and watches, and also comments. I do read them all. I respond to most of them, and thanks again. So I chose this background not because the market is on fire. The market was on fire, but then the Bank of Canada, the big banks, the real estate agents, the mortgage brokers, your siblings, your parents, your aunts, your uncles, they all kept dousing it with gas. And pretty soon it's going to be burnt to the ground. So that's why I chose this background this week. And the phrase of the week is death spiral, but I'll get to that in a little bit. First, I want to start off with some national statistics from select cities. It's the beginning of the month, so there's only so much data I have right now. So I'm going to share what was released and what I have, and it's just going to be brief. But then I'll get into the news of the week, which is pretty interesting. So here we have the Vancouver average property price, average sold price as it says. This is from Zolo.ca. I don't have the Vancouver Real Estate Board's numbers yet, but you can see it went from like well over 1.6 to just over 1.3, $300,000 decline since the February high. And that's about an 18 to 20% decline, which would be about the national average right now. And of course, the inventory is still trending up and the sales are trending down in that area. The Calgary Real Estate Board did release their numbers, and with their press release, they said detached home sales decline as apartment condominium sales rise. Significant slowdowns in the detached and semi-detached market were nearly offset by sales growth in the apartment and row sectors. This left July sales 3% lower than levels recorded last year, while this is the second month where sales activity has slowed. Total residential sales this month are still amongst the strongest level recorded in our market. Sales are declining, prices are declining, but it's still a very strong market historically. And looking at the data from there, the total months of inventory, you can see it is trending up. Still very low inventory in Calgary, but it is starting to trend up. And the average sales price in Calgary, now this is the city of Calgary, which again, the main metropolitan area around there. The average sale price has declined approximately 10% from the February highs. The median price obviously has moved a little bit more drastically. And the benchmark price has just started to turn down now. But you can see that separation, right, from the average price compared to the benchmark. And here's the total price change. And this is a year over year chart. So the average price change year over year, it's only up 0.6% from July 2021. So very little growth. It's going to be negative growth, it looks like, very soon. But yeah, 0.6 is pretty much zero. So we're going to start to see some negative price growth year over year, which is a pretty big deal. And the inventory in Calgary, of course, you can see the blue here. Inventory has increased, sales have decreased, and the benchmark prices, they put that in for some reason. But yeah, inventory's up, sales are down. So now on to Ontario. So Toronto board didn't release their numbers yet by the time I made this video, so I'll touch on that next week most likely. This is for the rest of Ontario, excluding a few smaller places. And average sale price down another 4% or 4.1% month over month, and a total of 20.6% from the February peak. That equates to just over $200,000 in the average price in Ontario. It was $983, it's now $780. So $200,000, pretty significant price decreases. And I think Ontario and Vancouver, I don't know which is leading, but one of them is leading the national home sales decline. And of course, that brings us back to August or September 2021 price points, just to put it into perspective. Average days on market is still trending up, and for any of those that like indicators, it looks like we have a double bottom, and a double bottom means a reversal, just like a double top means a reversal, which I found interesting. July sales in the same area, Ontario, very low. We're at winter level lows, and we're heading towards beginning of pandemic lows. In April, you see that big drop down there. I don't know if we'll reach it, but it looks like we're headed there. Inventory still significantly up. Again, you see another double bottom there, and inventory is headed up. The trajectory has changed a bit, but we're going to see lots of inventory. And here is the average percent of the last original list price, or how much are homes selling for compared to their list price. And you can see where we peaked at 120% in February in Ontario. We're down to about 97%. So huge difference. It looks like it fell off a cliff, right? The percentage of list price or sale price to list price. And months of supply for homes for sale looks like the other graph where it was number of homes for sale. But of course, supply is way up. We're at about 2.7 months of supply now. That's obviously looks like it's going to continue to increase. So supply is not going to be an issue going forward. Okay, so now into the news. The news in the last week or so was pretty scary. I guess if you're a seller, or depends on how you look at it. But I just wanted to go over some of the things that I saw in the past week that caught my attention. So the first one here is from the Globe and Mail. Toronto developers expected to delay 10,000 units as slowdown hits condo pre-sales. This is a sign that the broader real estate slowdown has spread to the pre-construction market, where purchases are seen as bets on future housing because buyers wait years for their properties to be built. Pre-construction buyers, the majority of whom are investors, have been spooked by the jump in interest rates, even though they do not immediately need mortgages when they buy pre-construction condos. Typically, a 20% down payment is required to secure a pre-construction unit. The buyer pays the remainder after the condo is built. So obviously, the title got my attention. They want to delay 10,000 condo units in GTA, but the pre-construction buyers, the majority of whom are investors, again, goes back to that investors. So once investors are pulling out, this is when you can see things really start to change, right? This was the big one that really caught my attention this week in the Financial Post. Canada's housing market headed for historic correction, says RBC. Downturn will be worse than any seen in the past 40 years. Canada's largest bank has downgraded its outlook for the housing market and now forecasts a historic correction worse than any national decline seen in this country in the past 40 years. The 42% drop in home sales from the peak in early 2021 will exceed the declines seen in the past 4 national downturns, Hogue said. In 1981 to 82 and again in 1989 to 1990, sales fell 33%. They fell 38% in 2008 to 2009 and 20% in 2016 to 2018. The 12% decline in prices in early 2023 will be the steepest correction in the past 5 housing downturns, he said. The housing correction first began to take hold when the bank started to hike rates in March, but the 100 basis point rise on July 13th, an increase that brought variable rates within sight of fixed rates, will speed the cooling, Hogue said. This is a pretty big statement from this Hogue guy, one of the economists at RBC. They're talking about sales, number of sales, not prices initially, but now they're talking about 12% decline. And that's going to be a year over year, not a percentage from the peak like I do. But once you start seeing 12% year over year declines, it's pretty significant and it's going to be a pretty big number. But while RBC economists are predicting a historic correction, they do not see a collapse in the housing market. Rather, they argue that this downturn would be seen as a welcome cool down after the 2-year buying frenzy that put homeownership out of reach for many Canadians. So for all you people that bought at the peak or near the peak, the Royal Bank's economist here is going to see it as a welcome cool down. So, welcome to your house being worth $200,000 less. RBC expects the correction to wind up in the first half of 2023, though a steeper and longer downturn can't be ruled out. So it's going to maybe wrap up, maybe it won't. They don't seem too sure. Anyway, solid demographic fundamentals, including soaring immigration and a low likelihood of overbuilding, should keep the market from entering a death spiral, wrote Hogue. So this is what got me. He could have said a further downtrend or downward trend. He could have said a further correction, a crash. He used death spiral. Like, why would you use death spiral? You could use apocalypse. You might as well just put apocalypse in there. Or the end of the world. Let's add that in and see how it sounds. A low likelihood of overbuilding should keep the market from entering the end of the world, wrote Hogue. Anyway, death spiral. I thought that was like very alarming when he's trying to be non-alarming, but now it's changed, right? So be warned of the death spiral, people. From Better Dwelling and supposedly from the BMO. The Canadian real estate bubble's supply shortage myth is unraveling. Oh, really? There's no supply shortage? I thought there was. Oh, well, I didn't, but everyone else did. Canadian real estate was driven by a speculative bubble, not supply shortage. BMO has prominently challenged Canada's supply shortage narrative. With the exception of SFU professor Andy Yang, few professionals questioned the supply narrative. It just made sense. Interest rates were cut and there were no more houses. Obviously, low rates designed to stimulate demand to help inflation had no role. Clear as mud to most economists. No, every market didn't suddenly run out of housing after rates were cut. The surge in price was attributed to a shortage of supply, and no one would hear otherwise, explained BMO. A certain segment of analysts, i.e. almost everyone except us, assured us that this was all due to a shortage of supply, while rampaging investment demand amid rock-bottom rates had almost nothing to do with the sudden price spike, said Porter. Strange how cities as widespread as Windsor, Welland, Woodstock, and Waterloo all simultaneously had a pressing supply shortage after decades of no such talk in the region. Again, watch my past videos. I've disproven the supply shortage. We have lots of supply. The demand was too great for the reasons he said, low interest rates and whatnot. Anyway, so they're claiming that they knew. I don't know. I didn't read anything before, but now they're coming out and saying that they knew all along that supply wasn't an issue. Few higher interest rates solved the real estate supply crisis. Lo and behold, higher rates have suddenly solved the supply crisis. Many people aren't aware that demand needs to be qualified or it doesn't exist. So obviously the links are in the description if you want to read the whole article yourself and all the rest of the articles. But again, interest rates go up, supply goes up because no one's buying houses. Very simple. Another one from Better Dwelling from Bank of Montreal. Canadian real estate is worse than official data shows. BMO revises forecast lower. Canadian real estate is undeniably in a downturn, but it might be worse than it appears. BMO Capital Markets warned clients that the market is eroding faster than expected. Official numbers fail to capture the whole picture, according to a research note today, citing a few important red flags. They said the data is worse than it looks, and it already didn't look great. The bank also shared a revised forecast showing a national price drop greater than 20%. They're joining RBC in the club of banks surprised to see the market eroding this fast. So again, when they're talking about a 20% national price drop, they're not talking from the peak, they're talking year over year, which is huge. So they've revised their forecast. Remember, they all came out a month or 2 or 3 months, whenever it was, and they had their predictions. Well, they've revised them. So no one has been right on this. They're not following the data properly. I don't know what their issue is, but it's not that hard. If someone like me can accurately predict what has been happening or is going to happen, and it has been happening based on calculated numbers, like this is basic math, I think these guys should be able to do it. But anyway, I don't know who they are. I don't know who's paying them. Obviously Bank of Montreal is paying them, but why are they so wrong all the time? I'd like to know. And lastly, from the States, Yahoo Finance, seller beware. U.S. homebuyers are backing out of deals at the highest rate since the start of the pandemic. Here's what that means for real estate. And again, links in the description. They go on to talk about it's almost 15% of accepted offers the buyers are backing out on. This is not backing out on deals that were supposed to close, like firm deals. This is just backing out in the conditional period. And there's all sorts of reasons, but of course it's because of rising interest rates and buyer sentiment, right? They're getting scared, they're getting worried, they're seeing the market start to change. So again, the States is behind us, like I've said, just like Europe is behind us, but it's starting there. They're probably at their peak or just past it. We're going to see a lot more news come out of the States, so watch out there. Don't be buying, obviously, in my opinion, I wouldn't be buying in the States right now. They're like at our February numbers right now. And I guess lastly, people ask me, and it's more than one person, there's a bunch of people, and they say, when should I buy or should I buy now? And again, depends on your situation. If you've sold your house and you really want to secure a house and it's in your best interest, then sure, buy. But if you're entering the market and worried about prices going down, well, I wouldn't be buying. or if you want to capitalize on the market, we're not at the bottom. We're not close to the bottom, in my opinion. And the numbers are still trending down fast. And the reports are coming out, and the builders are, delaying pre-construction sales. So again, we are still near the start of this. Things are going to get worse. Interest rates are high. They're going to keep going up. So it's a no-brainer, in my opinion. If you're at all worried if you're going to make the right decision, I would say hold off, wait it out. At least wait until the interest rates start to reverse course, so you can save your money on your monthly payment on interest, right? Because it is true. Right now, you are paying almost more than you would have in February with lower interest rates. So what's the point in buying now? There is no point. And some of the agents will say, well, their argument is, well, you should buy now because it could go up, right? And it may go up. Like, okay, well, what data do you have to support this? When people say this to you, ask them, say, what data or what trends are you going by telling me it could go up? If this is just a personal feeling or opinion, it means nothing. Like, support it, back it up with something. Because right now, everything is going down, supply is going up, interest rates are going up. There's nothing to support rising house prices. So again, just be careful, think about it, and let the data support your decision. Again, thanks for watching. Until next week, I'll see you then.